Many households feel that cost of living pressure is strongest in the spring. Even without a major crisis, expenses feel heavier, budgets feel tighter, and financial decisions feel more stressful than at other times of the year. In this video, you'll understand why cost of living pressure tends to peak in spring, how the different costs we've discussed throughout this series align during this season, and why this pressure is structural, not personal or permanent. Spring is often associated with renewal and relief. Winter ends, daylight increases, and life feels like it should get easier. But financially, spring is when many households feel the most strain. That tension exists because spring is not a single event. It's a convergence point where multiple cost systems reset, overlap, and become visible at the same time. First, it's important to understand that many major household costs update early in the year. Insurance premiums adjust, rent renewals surface, service contracts reset, utility pricing structures shift. These changes often begin quietly in January or February, but their full impact appears by spring. Next, spring is when deferred expenses return. Home maintenance, vehicle servicing, childcare changes, school-related costs, and seasonal services re-enter household budgets after being delayed during winter months. Now that we understand that, there's another critical layer. Income rarely adjusts at the same pace. Raises, benefit updates, and financial relief tend to lag behind cost changes. This creates a temporary but intense period where households absorb higher expenses without additional buffer. This leads us to an important pattern. Spring compresses costs. Multiple systems realign within a short window, concentrating pressure even though each individual cost may seem manageable on its own. Next, seasonal planning adds another dimension. Summer travel, childcare, camps, and family activities must be planned and often paid early. These future-oriented costs arrive while households are still adjusting to early year changes. Now that we understand that, spring becomes the point where past increases, present obligations, and future commitments overlap. Cost of living pressure peaks in spring because annual cost updates surface at the same time. Deferred winter expenses return. Income adjustments lag behind costs. Seasonal planning pulls future expenses forward. Household flexibility is already reduced. The pressure isn't caused by one bill or one decision. It's the result of timing and alignment across many systems. Feeling this pressure does not mean your finances are failing. It means you're navigating a period where cost systems demand more at once while leaving less room to adapt. Spring pressure is predictable, temporary, and structural. Understanding it helps replace anxiety with perspective and allows households to move through the season with clarity rather than confusion. Across this series, we've explained taxes, groceries, insurance, energy, rent, childcare, travel, and everyday spending. Each topic connects to the same underlying reality. Household budgets now operate with less margin than they once did. Spring doesn't create that reality, but it reveals it. Seeing the pattern makes it easier to respond calmly, plan realistically, and avoid unnecessary self-blame. Please like and subscribe if you have enjoyed this video. Your likes truly inspire us to create helpful content. Thank you once again for watching. We hope you have a blessed day.